Welcome back to Closing Bell on the 11th of December, Friday. I think I should change my show to the late night show because my episode seems to be coming later and later. But I'm still here. I want to share with you, plenty to share with you. So today, before I begin my segment, I want to speak about Brexit. Brexit is really my key concern just now this week. I'm concerned about the Brexit going really sour with no Brexit deal, which will impact the economy pretty much on Monday. And also not just that, but also the British pound will drop like carrots. I hope I'm wrong, but I'm really concerned. I'm sitting here thinking whether I should be going all my money into cryptocurrencies, because the last thing I want to do is my British pounds lose 10 to 20% next week. For stocks, you know, if the Brexit do go really sour, the European stocks and also the UK stocks will be falling. So I'm trying to investigate what stocks would be good to hold for long term. So stocks that I'm looking at is like the likes of a race like Ferrari and Louis Vuitton, LVMH, like luxury stocks will be something that rich people still be buying because COVID-19 is still here. And with Ferrari and Louis Vuitton getting more scarce on their products, their valuation, the value of their products will go up, so people will still pay. It gets more exclusive. And I'm looking more on the likes of London Stock Exchange, LSE, Hargreaves Lansdown, the areas where if we go into really low interest rate climate, where we go into inflation, rich people cash, not just rich people cash, will have to go somewhere to ensure the money will grow. And the only way to do it is to put in a stocks and shares account, in account trading. That's the only place to grow your cash. And also the third segment is the likes of William Hill, Flutter Entertainment, because when a country goes into a very depressive like state, people will start going into more gambling. There'll be more lotteries being played out. People are trying to get rich quick, trying to find ways, because job and unemployment will be high. The bring home pay will be low. People will try to do more gambling, to do more stocks and share investment, trying to generate more income. That's how I see it. I'm painting a really bleak picture. I'm sorry, but it's just the way that the news is painting just now. It's really affecting me. Okay, now I want to go to 4 key stocks that may be in good value. So the first stock that I want to bring is Lockheed Martin. It's like, Alex, you are Mr. Hypergrowth. Why are you looking at Lockheed Martin? Remember, we've got this recovery mode that's going on. We cannot deny recovery. People might be going back to work when this vaccine comes. Planes might be flying. Industries might be open. So Lockheed Martin is still one that's on a depressed. It's not doing so great on the stocks and shares, but the company is still producing revenue, still going. And I'm using this product here called Ticker, TIKR Terminal. Really good. I've been using it this whole day when I'm off. I've been just charting using it, and I'm using the functionality called multiples. It just generates charts for you. So on Lockheed Martin, I noticed, if you notice at the original price share chart, Lockheed Martin is still halfway through recovery. But if you look on the multiples, before COVID-19, Lockheed Martin was producing about two times its share price. It's cheap stock and it pays you 2% dividend, okay, 2x. But then if you look at where it stands now, it's actually with a depressed stock price, it's still producing about 1.6 to 1.8. It means the revenue is still there. And the revenue is still there, and the share price is so low, that means at 1.6 the share price is really cheap for where it is. So Lockheed Martin, it's cheap, undervalued, it pays you dividend, and when everything comes back, recovers, it will go up. So I cannot see any losing situation for Lockheed Martin. For those of you who wants recovery, who wants dividend, who wants a bit of stability, who wants diversification in the defense, Lockheed Martin might be for you. Next one that I want to go into is Zoom. It's like, Zoom's cheap? No, Alex, you're wrong. Zoom is dead. Zoom is dead. But let me show you a chart here, okay? You can see Zoom, it's gone all the way to 700, it's back down to 400. And when it first started, it was not even $100. But let's look at the multiples. What does multiples tell us? Multiple tells you the enterprise value of a company over your sales. So if the size of the value of your share goes up, the sales revenue goes up too. If they go at the same time, that means they're equal. That means they're fair value. Let me show you Zoom. So Zoom before COVID-19 is 29 times its earning on its multiple. After it falling to this 400 mark, Zoom is actually fallen to the same multiple of 29 when it was before COVID-19. So Zoom, when it was fairly priced before COVID, and now after COVID, it's at the same price, but the share price is 4 times or 5 times difference. So where I'm coming from is, if you're owning Zoom at 400, you're potentially paying a very fair price for Zoom. And if Zoom still goes on after COVID-19, they grow with new software, new revision, new things, new holistic products to go against its competition like Oracle, Microsoft, Salesforce. If they're changing the game, they might be a good one that if you are holding just now, I would hold it. I don't hold Zoom, but I'm surprised that Zoom is at the same multiple before COVID and after COVID at the point of 400, but the price point before COVID and after COVID, it's about 5 times. It shows how great Zoom has grown. Next stock that I want to go is UPS. UPS Parcel Service, United Parcel Service, has been delivering. The reason why it caught my eye is because it was soaring after August, people going online e-commerce, they're doing really well, their quarterly earnings are doing well. But since August till now, they're stagnating. They're not really moved this price range, about 160. They're not moved. But UPS is innovating, they're changing. And let's go on the multiples. The multiples before COVID-19 is about 1.6. It dropped obviously to 1.2, another cheap stock. And then now, because of it's going stagnating, it's falling. 1.6 versus 1.9 multiples. And in fact, we know that after Christmas and 2021 onwards, when business comes back, people are still buying online and people are going back to the offices, people are doing lots of delivery parcel service for business, things are going to start generating. So I think this multiple will go lower, meaning you'll get cheaper, but the revenue will go up. So I think UPS is at a point where I think it's quite pricely cheap. So I do not want people to regret in 2021 and say. So finally, one which I initially thought that it's not good to buy because of growth, but in terms of valuation, Salesforce CRM, because they took over Slack and they're a bit depressed just now. So Salesforce before COVID-19 was 8x. Okay, so after COVID-19, all this hoo-ha about online sales, commerce, everything just went rocketing up. And they got inducted in the S&P 500. So Salesforce has dropped dramatically after the buyout of Slack. Even though they did really well in their earnings, it's dropped dramatically. So Salesforce is actually under the price or equal to pre-COVID-19. And the fact that COVID-19, they're actually doing well. So something is not right here. It's too cheap. It's not 10x, it's 8x versus 8x. So I think Salesforce is something good. And in fact, I actually went into Salesforce on my eToro because it's cheap, it's a cloud stock. It's still got 20% growth. It might be declining, but it's still 20%. It's better than the growth on the likes of Microsoft, for example. So, you know, looks very, very attractive. So this is me on my show today. So I hope to see you over the weekend. I've got a couple of stuff that I want to share with you guys, but I'll keep it quiet just now. I'm still scripting away. Hopefully give you guys value, nothing but value. So have a good night, have a good weekend. If it's in the morning, good morning to you guys. Okay, have a good day. Bye.